Okay, well, hi and good morning, everybody. I'd like to welcome you to today's Paynes Education. This is the Intermediate Advanced class with me, Rob Eiler. I'll be your host today. I want to welcome everybody out here on this bright and early Thursday morning. Hope everybody's doing well. Market started out kind of well, but it's kind of fizzling out. Even after we had that stellar earnings announcements from NVIDIA, they just blew all the numbers out of the water, and so very impressive. But even that stock is kind of faltering a little bit at the very beginning here. So sorry to see that, but nevertheless, we'll take a look at the markets in just a moment and have a great session here today. So I appreciate everyone tuning in. Let's go ahead and get started. As always customary with these sessions, just have to first remind you about a few disclosures. So bear with me as I let you know that anything we talk about today is just for educational and informational purposes only. These are not buy or sell recommendations. All investments involve risk, and past performance does not guarantee future results. Unstoppable Prosperity and Charles Payne are not giving investment, tax, legal, or other professional advice. Unstoppable Prosperity retains all titles, interest, and intellectual property rights of the material provided and contained herein. The terms Unstoppable Prosperity, Paynes Education, Wall Street Strategies, and other logos or trademarks cannot be used without express written permission. Charles Payne's experiences are not typical. His results are not a guarantee for your success. And finally, Unstoppable Prosperity is not endorsed by or affiliated with Fox Business. Making money with Charles Payne is the property of Fox News Network, LLC. All right, very good. Want to welcome everybody, one and all. And if you happen to be brand new, there are my credentials. And so hopefully over at some time, I'll be able to get to meet with you, talk with you, certainly help you out any way that I can. I'm very passionate about investing and trading, really enjoy what I do here. And hopefully these sessions are helpful for you and they provide value to help you out with your investing. All right, well, on today's topic, we decided to go ahead and talk about the stock trading journal. And the reason why is I've had a few students who asked about, do we have a trading journal or something I can use to keep track of my trades and document things? And I had a few other students email in, and so I aim to please. And so you ask and I'll deliver. So today's session, what we'll do is we'll talk about how we use a trading journal and just go through a simple demonstration and discuss, take it a little bit further though, and discuss why we track our performance and some of the metrics that professional traders use out there that we can also use to help kind of define, what we're doing well and what we're not doing so hot. Just basically, how are we doing? How's our portfolio looking, and how can we learn from that? And so, more importantly, what I'd like to do is take that information and show you how you can analyze the results and determine, well, yeah, what are the areas that I need to work on and improve upon, and what areas am I doing well at? And that way, you can become certainly much more better and more consistent investor and trader. Okay. Now, in going through that, just a few disclosures I have to let you know, and I just want to bring this up to the very beginning here, just as a reminder that we'll look over a sample trading journal and some results there, but just keep in mind that any trades, results, the ratios, things we look at, it's not a guarantee, right? It's just for educational, informational purposes only. The results don't show that. They're not suggested that, oh, that's what I should be getting in my account. You should probably be doing far better, quite frankly, when I looked over this. In fact, what I did is I went ahead and just took my margin paper money account and started from the very beginning of the year and just tracked all the stock trades. And in hindsight, now I kind of wish I'd done my IRA account, just because I do a lot of options trading in that margin account. And so really, I didn't have that many stock trades for the year. But nevertheless, we'll use that just to show you some examples, just to demonstrate how we use this journal. Now, your results, of course, may vary greatly. It makes no difference to us what site or what software you use or what journal you might use. In fact, you might ask around. I do know for a fact that there are some great journals out there that our students have created and used. I remember Wendy, for one, had one, and a gentleman that's no longer with us, but his name was Steve Walbo, created a wonderful trading journal. And so if you happen to be, in groups with the other students out there, you just might inquire, and they may want to even share that with you. I do know if you go online, you can certainly find different trading journals that are available out there. Most of them typically charge you, though, for it. And I don't know if I'm willing to do that. And if you are going to search and use a journal somewhere out there online, I would just advise you to be careful too, because we did, as instructors, stumble across, when we were researching for this, some journals that how do I phrase it politely? It's where when you click on it, it looks like it's a real journal, but then they have these hidden viruses and things in there too, right? You got to be kind of careful. So we had to be very careful, let's put it that way. So what we did is we kind of created our own. It's not perfect by any sense of the word. It's certainly something that is kind of a work in progress. It doesn't have all the features and benefits you might expect out there, but it is something that anybody could use at least as a starting point to track your trades. And then, like I'll show you here in just a moment, it'll also show you some of the number of results that we can analyze for that. Okay, so just kind of keep those things in mind. Now, we do use the Excel file for that. If you don't have Excel, I'm not sure how to help you out, quite frankly. And so I just want to point out one last caveat here is that there's a true fact that I am not a computer technician. Far from it. I'm lucky to get by with a computer, it seems like. And so you have to know your own computer. If I can't help you out with how to use Excel or how to download it on your computer or anything like that at all. And if you're struggling with that, I suggest you get a computer person, or better yet, just call a local teenager, right? They seem to know everything about computers. They seem to have all the answers for that. But just keep that in mind. We only provide this as a courtesy. We even hesitate to provide because I know it's like with our advanced peer-to-peer worksheet, it's not perfect either, but it's a wonderful worksheet. But boy, my goodness, there seems to be bugs and things like that. And we appreciate students using it and pointing it out to us, but they have to keep in mind too that, yeah, we're not computer technicians, so we're not in the business of programming and things like that. But we do appreciate everyone that uses these things. All right. So you might be wondering, okay, well then why? Why a portfolio review? Just a few key things to keep in mind is that number one would be to determine our performance. And to do that, oftentimes people will use a benchmark to help kind of compare and see, well, how, am I doing all right? Am I doing better than what's expected, or do I need to improve upon that? And there are many benchmarks you could use. Primarily, a lot of people will tend to use something that tracks the overall market. An easy one, of course, would be the SPX or SPY, which is our S&P 500. You'll hear oftentimes out there in the news where they'll make comparisons to how well this particular fund or investment group is doing compared to the S&P 500. But that is just still only 500 large cap stocks. And so oftentimes people will maybe use another ETF that would track the overall markets. In fact, just to do this, let me share with you my desktop here. I'm just going into our Thinkorswim website right now, and you'll see we're looking at the Dow, and look how that rally quickly fizzled out. The Dow stock started up pretty high, but now we're actually down a little bit, and that's a shame. The same thing could be said for the Nasdaq. I saw that it was really fizzling out. It popped up just right at our 50-day moving average, but it was kind of pulling back a bit. So I guess it wasn't enough to have Nvidia have such strong earnings. They were over 500 at one point. Now they're only up 12 points, but I was suspecting that the tech stocks might have a decent day today, but I noticed that even that sector overall is actually down. So it was kind of short-lived. It just shows again the bearishness that this market has as far as the sentiment goes. So even the likes of Microsoft and other companies that are in AI are actually struggling at the moment here, which is unfortunate. I was really hoping that the Nvidia might be enough to drag up all the other markets and the stocks and to rise up higher. But oh well. All right. Well, hang in there though. We'll keep an eye out and look for some opportunities on that. But I was going to say that a lot of people will use something like the SPY as a benchmark. But if you wanted to look at more of a broader based, oftentimes people used to use the Wilshire 5000. Now we're talking about 5,000 stocks. They used to have a symbol for that. I think it was TMW. But see, yeah, that no longer exists. So I think you can still use at W5000. Yeah, there we go. The Wilshire 5000 Total Market Index. And kind of curious, it's actually moving up today. Go figure. Oh man, this doesn't work either. This is actually of May 31st. So I'm not sure what's going on with that now. Oh, I failed to see that. So maybe don't use this after all. I was going to say, I don't know why that would be up today, but now I'm noticing here the last date was May 31st. All right. Well, I believe another symbol, and I remember the symbol here for this. I think it's WTI. Yeah, so this is just a Vanguard stock market ETF. It's just another simple one that people could use just to see, well, what type of returns of the overall markets have had. And so what I might do is just take the very beginning of this year. I could even use my trend line as kind of a measuring stick and just take at the close of last year, click and drag it up to where we're at today at this moment. And we'll see that overall, for the overall markets, we're up about 15.35%. You can just see that in this little box that appears here, for that time period. The Dow is certainly less. The S&P is a little bit less than that too. I think it's about 13 or 14%. But nevertheless, as we know, the markets have actually had a pretty good year compared to what we did last year. Now, with that said, and I think Charles has pointed this out too, it seems really kind of silly to just do a year-to-year comparison, right? But what else can you go off of? And we bring that up because, yeah, you're going to have investments that you've held on to from last year or several years from before. You'll have both long-term, intermediate-term, and short-term trades. And so, in fact, when I was going through my analysis, I had to keep that in mind that, well, actually, a lot of my best trades are longer-term trades that I've just held on to, because why would I get out of them, right? And so if I'm only taking into account those trades that were done this year, it's going to be skewed, quite frankly, to maybe more of the downside, the negative side, because these are trades that I'm going to be getting out of. In other words, the realized gains and losses are typically those trades that you are, exiting out of, right? That's the way to create that realized gain or loss. So just one caveat on that, I wouldn't look at this as being a true representation of what our overall gain or loss is, because it's not. It's not taking all things into account, but it is a way at least to be able to see, well, how are my trades doing as of this year that I've done this year? And later on, we can even compare if we want to, like a benchmark, for example. Now, Steve says we could use the MSCI. Certainly, that's more of a world index. Now, I typically don't have a lot of global stocks in my portfolio, but and that's the other thing I want to point out too, is that perhaps try to use a benchmark that's more appropriate to your type of investments. So, for example, if you're like me, I typically generally tend to be a little bit heavier weighted in a lot of tech stocks because, well, let's face it, tech stocks are typically growth stocks, and I like growth stocks. And so if I happen to be more heavily weighted in that particular sector, then I may even choose to use something like, well, maybe the NASDAQ, even just the Qs, for example, where it's just more certainly heavier into the NASDAQ and the tech types of stocks. So to be fair, yeah, you may want to decide to use something that's more geared towards your investments. And MSCI is a world index benchmark, and certainly you could use that if you wanted to. All right, so what we do though is we want to analyze both our winning and our losing trades. I'll believe it or not, I tend to focus more on the negative. Whereas I know most people focus on their winning trades, which is good. But the reason why is I want to know what have I did wrong, right? Can I see a pattern there? Can I observe some tendency that I just overlooked that I can fix? Because I'll tell you right now, one way to really get ahead with your trading is certainly we want to have good winning trades, obviously. But if you really want a quick and easy way to get ahead, is to learn to manage your losing trades. I bring that up because it was an observation I made many years ago when I started back in the late 1990s. You might recall back then it was the whole .com era, right? The internet bubble. And literally you could buy any tech stock and it'd go up like 10 points every day. It was fun. I thought trading was easy. And so my account just went straight up. But then in the year 2000, well, I was quickly humbled because I realized the markets just don't go straight up. They come down too. And so over the many years, my account really looked like this. Big time winners, then it went down like this. Then it go up again, then it come down. And so it's like one day I'm rich as Bill Gates, and the next day I'm poor as dirt, that type of thing. And so it wasn't until I documented and even observed, even plotted out my gains and losses, to where then I discovered this kind of roller coaster ride. And I figured, well, wow, yeah, how else can you get ahead if you're having big losers to go with your big winners? And so over the years, I've learned to embrace small losses and to manage my losing trades to where then, my account looks more like this. And that's how to get ahead, is that you have these periods where you have these huge stellar winners, and then you have these periods where you are losing too. And that's just part of the business. If somebody tells me they never have losses, I kind of chuckle and think that's ridiculous, because that's just part of the business. And it's not a big deal so long as we keep those losses small. So that way, this is how you get ahead, is that you have more of an upward trend with your overall market portfolio. Now, it's kind of cool in TD Ameritrade, in the actual website, the web-based version, they'll show you a graph of your total performance of your account, which I think is kind of cool because it just allows you to see visually during different time periods how your account is doing. And I hope Schwab has something similar to that, because I like that feature on TD Ameritrade. All right, this also allows you the ability to recognize tendencies and patterns like we talked about. Both those are good and harmful. Helps determine what works well and does not work well for our investing style. Keep in mind there are different investing styles. I do all the above. I certainly have buy and hold stocks. I certainly have those shorter term swing trades. I tend to be by nature more of a trend trader, which means that I'll buy and hold on to a good fundamentally sound stock as long as the trend is intact. But if that trend breaks, then I'm not just going to be sitting there and holding on to it. So I'll be more inclined to exit out of those types of investments. I might even do a day trade here and there. I certainly do other strategies like with the options and so forth as well. But I want to try to look over the results and see what worked well and then what doesn't work and then try to change that. Okay, more inwardly, it also helps us to recognize and define our strengths and our weaknesses. It's kind of embarrassing how it sometimes can shout out at you. Like you might observe that, wow, I really have the tendency to hold on to this loser way too long. What was I doing? And you know, if you observe that, then maybe you can make changes. And that's the key, right? Is to go in with a non-biased type of view. That don't go in with an ego. In fact, you might even have a loved one or friend or somebody go in with you and look at your numbers and say, this is what you're doing wrong, right? Be your consultant. So that way we can be just dead honest with ourselves. Allows us to take note of everything we learn. And you notice I also said and felt. Now, why would I put that in there? I mean, it's good that we take note of everything we learned, but and felt. What role does that play with our investing? Well, you might recall the three-pillar approach, right? That we look at both fundamentals and technicals, but Steve's got it. Yeah, there's equally as important. There's also that behavioral side of investing. Let's face it, trading is emotional. Money is emotions. We've got greed and fear battling it out all the time. And I have to admit, oftentimes fear tends to win the battle, although I've been very greedy too on many of my trades. But I'd like to learn, what was I thinking at the time I did the trade? And, you know, was it realistic or not? Hence, I typically put in my notes, if you've tuned in with my classes, I write down reasons why I did the trade and also reasons why I maybe would not do the trade. Let's face it, I think we can always find a reason why not to do a trade, talk ourselves out of any trade. Write those reasons down, but still do the trade. Because then you can come back and then learn from that and say, oh, did I really need to be that fearful that the market's going to come crashing down in September? Was that a real fear or not? You know, and it's funny how oftentimes the things you worry about never come about, right? At least that's what my mom told me. I think she's right. All right, it helps us to examine and adjust our trading rules. That's the overall idea, right? To help redefine and try to perfect our plan that you have. That way you can be more consistent with your trading. Helps us encourage performance-driven growth. That's what my goal is anyway, is to make sure we're growing in our account. And then finally, just overall, it just puts our investing into perspective. And I encourage my students to do the same thing. You know, don't be staring at the computer screen all day long. You'll go crazy doing that. In fact, when I'm done with the day, I turn off my computers and go do other things because I work at home. So, it's just one part of it. It's just a means to an end. It's not the end. Okay. I never felt the reason to buy 8 monitors to stick on my desks and be looking at those. It looks kind of cool. I met a gentleman that had 9 monitors, 3 by 3, and I thought I would go crazy if I had to look at all those monitors, but he thought it was cool, and okay, more power to him, but it's not necessary, quite frankly. There's a balance. Make sure you've got that proper life-work balance type of thing. All right, so these are some things. So there are some portfolio metrics that we want to consider, and then we'll jump right into this journal here. But some things to keep in mind, and we'll bring up these numbers later on and show you how we bring them up. But very basic, we want to see, first of all, how accurate we are. What is our winning percentage of trades versus our total amount of trading? So we just take our winners, divide into our total amount of trades. We can decide what our losing percentage is. That'd just be the exact opposite. We also then want to take a step further and decide, or figure out what would be our average win dollar amount. When I am right, on average, how much money do I actually make when I'm profitable? Not just for each trade, but for each trade. Okay. We can also determine when I lose, then how bad is that? What can I learn from that? Is it just a small amount? Does it wipe out all my winners? So we'll show you how we can do this. We can run through the math ourselves, but the cool thing is the computer will do it for us. Okay. We can also introduce what we call the profit factor. Again, this is just basically a ratio. It's taking the gross profits and dividing it by the gross losses. But what it does, it helps to analyze the degree that our wins are greater than our losses. So it helps us to basically understand the amount of gain that we realize for 1 unit of risk. And I'll show you what we mean by that as well. And then generally, I like to come down to a final number, which would be our expectancy. And it's still theoretical, but it's kind of nice because it'll help us to see what, really in a nutshell, what we anticipate to make for every trade that we make. And if that could be certainly a positive number and a very positive number, then it builds that excitement for me, because it's like, oh, I know I'm not going to win on every trade, but I should expect to make this when everything does average out. And if it's not a very high number, then we need to improve somehow, right? But that's where it kind of sums up your trading experience in one number, to where it's like, this is what I anticipate to make for just simply doing a trade, whether it be right or wrong. Okay. All right, so let's introduce you to this. And certainly you can ask questions while we're going through this, but I'm going to come into our Payne's Education site. And we have this throughout our website, but if you go up to the top and go to the resources, you can come down to where we have our stock investing worksheets. And this is where you access things like the quick analysis worksheet that we use in our quick start classes. You notice we've got our peer-to-peer worksheets down below. We've also added this caveat here, and I know it may be aggravating for some students, but they've made the decision, Charles has, to not allow people to go in and unlock the worksheet to do their own thing. I think you could probably take the worksheet and save it in your own at home, and then mess around with it, or try to emulate it or copy it somehow. But I guess I had some issues with some people doing things they shouldn't have with that, and we don't want to get with the copyright issues and things like that. So they've just made the decision not to share passwords, things like that. Okay, but certainly you're welcome to do whatever you'd like with it on your own. But down below, you'll find it's down at the very bottom, other worksheets, where we can just simply click on the stock trading journal. I happen to have Google Chrome, so it brings up to my downloads up above. I can just download it, and then that'll bring up the worksheets. So let me just bring it up here. I guess I got it on the other screen. Here we are. I'll make it bigger here. And then, of course, just remember to enable editing up at the very top. Okay, so you'll see we just have two tabs. We've got our portfolio tab, which will give us a summary of all of our trades and some numbers that we'll go through in just a moment. When I'm ready to use it, I can just click on the stock tab down at the bottom. And you'll see it's here where we can just simply punch in our trading data. Now, you could go in and even take from a spreadsheet, or if you use a CVS file, or you could just go back to Thinkorswim like I did and be able to copy and paste a lot of that information in. For those who are users of the subscribers of the W Street site, the hotline reports, if you happen to use that portfolio tracker, there is a way where you can go ahead and save your again achieved results, the closed trades that you've got, and save that as a CSV file. You have to kind of adjust the columns a little bit, but it is possible to make it easier to just go ahead and copy and paste, if you're a user of that portfolio tracker, into this site here as well. Now you notice that the areas that are just kind of lightly green, shaded green, these are the columns that we can fill in. And then those that are just kind of darker green, the computer will do that for us. And so we're unable to click in those columns because we don't want to delete the program for that. But certainly we can click on these other columns to punch in our information. So just for example, I think actually it was just even last night, we had entered into a few trades in our Q&A class. So if I were to come back to my margin account, I can just go ahead and go to my monitor tab. And I'll just point out here, as you'll notice, I've got all sorts of different things going on here. I've got different options trades. I've got vertical spreads. Down below, I've got these stock trades. And these are still live, right? So you see I've got a few that have winners and a few that are losers, kind of all the above. A few of these losers I should probably get out of. But I've got quite a few bigger winners too, like here, there's NVIDIA. That's $9,000. Well, I wish that was being taken into account in my portfolio now, but it's not, because it's not a closed out trade. Okay, so like I say, it's a little bit, I won't say misleading, but it's not really showing me the true returns or performance of my account, because it's not taking into account those existing positions that we have. As I mentioned before, well, typically I'm going to hold on to my winners longer than I should for my losers, right? So this might be more showing the losing trades. But nevertheless, if I want to start typing in, what I can do is I can go to my account statement. You'll notice up at the top, you can go back to whatever time period you'd like. So I just went ahead and went back to, I should just go back to the beginning of the year to see what trades that I had. And by choosing the date, the time period, this is what I could do here. In fact, what is today? Today's like the 24th, right? Yeah. And you could choose any time period. You could start, in fact, when I taught this class, and it's been about 2 years ago, I went ahead and started from the very beginning when I first started teaching here. And so it's kind of cool, because I was able to show you that exactly 1 year of performance from when we actually started out with just 100,000 in the paper money account, and to see what kind of returns we had. Here now it's going to be a little bit more difficult, just because we've been trading for a much longer period. But this will bring up your history. I'm not so interested in the order history, but I can bring up my trade history. See, I've had a lot of orders, but you'll see again, a lot of these, I didn't realize how many options trades, because we're teaching options here too, that I've got in here. But what I would do is I just type that information. What I could do now is I could just arrange this even by, the date, to put today's date at the top here, and just start punching in, some of the trades that we've just done recently. So what I could do here is I could just come in here and I would say, well, okay, my entry date, what I do the other day here on the 23rd, we bought into Domino's Pizza. Yeah, that was an alert that Charles had sent out. So I could just start typing in, I could put in the name, DPZ, oops. Can't type today. All right, shares I did, what, 13? Because it's kind of an expensive stock. And then our price that we entered into would be 382.97. Keep in mind, your order history is what you put in, but the trade history is actually what actually took place. Okay, so we could have all sorts of different orders that were filled or different numbers in that, but the 382.97. Okay, and you'll see it computes the cost for us. Then we can even, better yet, put in some reasons why we entered in. I might just say this is a CP alert, or maybe it was bouncing up, I think is what we're looking at, that type of thing. Okay, so you notice over here on the left-hand side, it'll say O for open. So we may have different positions that are open for that. It doesn't compute what our gain or loss would be until we've actually closed out the position. So let's just say today, what if we closed it out? Maybe we had a day trade here. I could put in today's date. I don't think the stock's up at all. Let's just take a look. Yeah, we're actually down, darn it. Well, that's all right. Let's pretend maybe things did move up. Actually, I did all sorts of weird things on that here, but let's just say if we'll be positive here. Let's say if we moved up just a few dollars, maybe up to 385. So if I happen to be selling it and could get out at 385, then it'll compute and shows our total credit, our gain, and computes our profit and loss for that. So not a big percentage winner, and we only made 26 bucks, but you'll notice up above it starts computing then for us our wins and our losses and our total profit. Okay. Oh gosh, Steve, I'm not sure what version of Excel. Yeah, just whatever the latest is. If it's 10 years old or something, it's probably not going to work as well, quite frankly, but it should, it should bring up for most people, I think here. If you had to a current position, would that be a separate trade? Yes. And so there are times where I've done a swing trade. And what I'll do is that oftentimes I'll get out of part of my position. So I'll just go back and change the quantity and then just enter another new trade. The dates might be, out of date at that point, but that's okay. And so I just put that in and then just kind of split it up that way. I can also do this for shorting. It's just I put in a negative quantity if I'm going to short something. Technically, you could even attempt to use this for options. We had talked about maybe adding an options tab for a lot of our options traders. That's something that might be in the works, but just don't have anything out like that just yet. But I have seen that if I view the options, I'll just put it in as 100 increments. So if I'm buying 2 contracts, I'd put it as 200 and then type in the price of your option. So technically, it can still be used for an options trade too. Okay. All right. Carol says, yeah, how to put in a swing in journal. I'll show you that just a moment. In fact, this is just showing you here how to, put in that information. Pretty easy, right? And I'd just say reason for X is I, sell quick profits, let's say, that type of thing. I'm going to emphasize, don't ignore your notes though, and maybe try to be consistent with what you write in the notes so you can kind of see those tendencies, those correlations, if you will. All right, well, I'm not going to go through all these, obviously. I've already done the work for us. So I'm going to bring up now the trading journal that I created for all of the trades for this year from the margin account. And there weren't that many, quite frankly. I was hoping there'd be a lot more, but here we go. Here's what I have, about 22 trades then. Kind of surprising. I thought I had more. Turns out I think I did more in my IRA account than I did in my margin account. But again, this is keeping track of profits and losses of those that are closed trades. So again, not a true picture, I'll be the first to admit, because it's, as I mentioned before, it's not taking into account our open existing positions, but it's computing what we had for our closed positions. But you'll see here, yeah, that's all I did. I just went ahead and took, I'll just come back here for a moment and we'll arrange this the other way around. There we go. Like there's DIG, Those are options, but I skipped the options. If I did dig, urban, CIZ, there they are, dig, urban, CIZ. Okay, and put in the entry, all the information here. You can see I wrote down some reasons. Might have to go back to the chart to see what they were, and went through all that information. Okay, if I'm doing a swing trade, like we had on Williams here, you'll see that I wrote it was a swing trade. Then what I did is I just divided it up. So I bought 100 shares total on the same date, but because I exited out of just part of the position, then I sold 50 shares instead of 100 at this particular price because it met our first target. I noticed though the second portion though is still an existing trade. In fact, let me bring that up here. If I bring up WMB. Okay, yeah, I remember this one now. Yeah, so we had our target up here. It looks a little bit higher now for some reason, but we'd met our initial target because we were down here. Well, we got in down here. So kind of our mid-range was right up in this area up here, see? So we sold part of our position at a profit at our first target. And then what we did is we raised up our stop because we don't want to be stopped way down here now. In fact, I could raise that up even further if I'd like. We raised up our stop with our bracket order, and then we have our limit order up here to exit out at our ultimate target around 36, it looks like. Okay. And so I kind of like these swing trades because these are pretty much automated, right? I mean, I didn't even know where we were at on WMB, but thankfully it's trying to go still in the right direction. Just needs to go up a little bit more to where we'll hit our target and then it'll lock in our profit, or it's going to come down and stop us out. Although I certainly could raise up that stop. In fact, I think I might, just so that we don't, no reason to have to wait for it to come down all that much, right? But that's how you could enter that in. It's just two separate trades. If you anticipate you're going to get out, and even if you don't know at the time, that's okay. You can always go back in and change the quantity amount and then just add another trade on that with the same date. Okay, so that's how you do that for a swing trade. All right, so as you'll observe here, yeah, my goodness, right? All sorts of different trades. I thought I had more, and again, you'll get better results when you have more data. It just makes sense, right? When you have a larger sampling size, when you just have a few trades going on, it's not going to be that, relevant or accurate, I should probably say, as far as what your overall performance will be. But you'll see certainly here, I've got some winners, I've got some losers, but let's show you what the numbers would look like. And then we'll look over some of these specific trades to see what we can learn from this. So as I come back to our portfolio tab, now you'll see it's input this information in. So really only 2 or 3 boxes that I could put information in. That would be, type in my year. If I'm looking at it for the year, I can put in my name of my account. And then I just took my beginning balance as of that year. Okay, January 1st. And so what the computer's done is it's looked at, basically there are 22 trades. And apparently we had 16 winners, and these are all realized. Realized means that we closed them out. So again, I've got more trades sitting on there at the time. In fact, so I come back here. If I scroll down, I mean, we've got 13 down to, well, now I've got even more, 48. But that would suggest, what, about 35 trades or so going on at the moment? There's still plenty, 15 or so that are still open. All right, but out of the 22 trades, we had 16 winners, 6 losses. It shows what our profits were, subtracting out our losses, what our net profit is, what we had left over after our losses. At first glance, I'm thinking, wow, how does that look as far as a percentage win ratio? To me, that's pretty phenomenal, believe it or not, that we're correct, 73% of the time. But we'll find out in just a moment, is that really the most important number here? I mean, if I saw nothing else and saw that, I might think, wow, I should be filthy, rich right now because I'm right, almost 3 out of 4 times. Okay. But, at least for our closed trades. But we'll see that maybe being right isn't the most important thing. Can you believe that? Who said that? I don't have to be right, but I can still make money if I'm not right. Well, the answer is yes. And so what I find interesting is that when you start looking at some of these numbers here, look how we've got our profits up here. We have what we call our profit factor. Now, once again, this is just a ratio, and it's taking our profit divided by our loss and showing us, well, what basically can we anticipate making for our winning trades? So if I have a profit factor here showing 1.8, it suggests that if I were to invest $1, that then I should expect to earn $1.80 for the amount of risk for that $1. Does that make sense? So if I'm risking $1, then my reward should be 1.8. Well, certainly the higher the number, the better, right? I'd like to see above 2 or better, just to make sure that, well, am I willing to take a risk if I only make 1.5 or 1.25 or even 1.8 is not too bad, but I certainly want to be better on that, right? Certainly the higher the number, my goal would be to be certainly at least above minimum of 2. That way I could feel like that if I'm going to risk $1, then I should expect to make $2 out of that risk, kind of a 2-to-1 reward risk, okay? This just does the percentages, showing us, okay, well, if we're correct almost 73% of the time, then we're losing 27% of the time. But this is what I find interesting. What can somebody observe down at the bottom here in this area? What area do you think I could really work on here that might make me kind of gasp even and shudder looking at some of our numbers here? I think Dan's got it. Yeah, cut my losses. I mean, look, when I'm right, making money, my average profit, I'm not going to sneeze at any profit, right, is 116. My average winning trade is 358. Okay, good. So when I'm right, I'm making on average about 358 bucks. Again, there's only 22 trades here, so I thought these numbers were pretty low. But what really shouts out at me is this number right here. Oh my goodness. So when I'm right, okay, I make a little bit of money, but boy, when I'm wrong, I am like dead wrong, aren't I? I mean, good night. That's bad news. So thank goodness I have been correct more often than not, because can you imagine if I'd only been correct maybe, I don't know, 65% of the time? Having such a huge losing average here, you can see how very quickly, I mean, it's not quite double, obviously, but it's still pretty high, that could quickly wipe out any winning trades. Okay, so I love how many of you are making that observation that, boy, if I want to just get ahead, I really need to work on my losing trades here. Now, it could be, one-offs. It could be extremes, right? That they're outliers. And I think that might be the excuse here, and we'll look at that in just a minute. But in fact, you'll see here that I've had actually a pretty good winning trade. I think that was on that semiconductor stock, where our largest winning trade was this, and that's not even an option. That's just a stock trade. So kudos to us. We had a big winner there. Largest losing trade is certainly much less, but if I have a lot of those, which apparently I do because our average losing trade is that, then that's going to eventually do damage. It's going to catch up with me. Okay. So John says, yeah, maybe we could have tighten up our stops, and I'll show you how maybe that could be a detriment, believe it or not. I'll show you that in just a moment to my winning trades, believe it or not. It's something I observed here. Don asks, how can you recoup in the remaining open trades? Well, we can adjust, right? We can say, hey, maybe I better be quicker about getting out or managing my position sizing. All right, well, this comes up with this final figure, this expectancy. Now, between you and me, I look at that and I'm just like appalled again. But I try to remember that, well, this is just a paper count and I've got all sorts of other things. I'm actually doing a lot better. In fact, if I'd had time, I wish I could put in all my options trades and we'd see how that's a much higher number. But at the end of the day, this is what I can expect to make whenever I do a trade, whether it be a winner or a loser. Thankfully, it's still positive, but I'd certainly prefer to see a much higher number there because that would get me excited. In prior classes, when I've taught this, we had numbers anywhere around from 400 up to 700, which is more like it, right? It's like, oh, that means that if I'm doing a trade today, whether it wins or loses, I can expect that when the average is all out, I should be making, $400 or $700 or whatever. That gets you excited. It's like, yeah, it's worth it to trade. Here, well, it's still worth it, I guess, but it's not all that exciting to me. So I need to improve here, at least on these types of trades. It's expectancy of 116. Let's see, I missed a question, I think, earlier about how do you account for the dollar amount that you add to your account during the year? Oh, yeah, that can get a little bit tricky. So if I'm adding money into the account, adjusting that, then I may have to take different time periods. I may just put up to that point and then do another spreadsheet. So you can have multiple of these spreadsheets for just those different time periods. You can certainly add in the money, but just keep that in mind that, well, again, I've got a performance up to this time period, but after I added money, then that's going to be skewed, of course. Okay. Well, let's see if we can look at these numbers in more detail. Now that we've got, some results here, let's determine, and let's see, what is the difference between expectancy and average net profit? Well, your average net profit, again, is just showing you after your gains and losses, it should be close to that number, quite frankly, right? Because that's what you're expecting to make. And these two will also factor into that. They should be somewhat close. Now, this is a little bit different here because we're showing our profits versus our losses. But again, the way we compute this is that if we take the amount of percentage times that we're correct times our average winning trade, and then also take into account the percentage times that we're losing, and then put those together, then that's how this number would come up. And I'll show you that math in just a moment here. Well, in fact, let's do that now since we're talking about it. Let me come back here. All right, first of all, our profit factor. Just take our profits divided by our losses. So we mentioned higher is better. Ideally, if we can get above 2. So there were the profits that we had, and our total losses, our gross losses. So it just comes up with that 1.8 ratio. So it just helps traders, again, to analyze the degree to which wins are greater than losses and the dollar amount made for every dollar lost. So like I said, if I invest $1, I should expect to make $1.80. Well, that's in a perfect world, right? But we observed that when we factor into the percentages of times that we're right versus percentages that we're wrong, that's where the expectancy could be a little bit more accurate number on that. Okay, so our expectancy, what we do is we take our average win times our winning percentage. Again, it's nice the computer will do this math for us. And we subtract out our average loss times the amount of times or percentage that we're actually losing. Okay, so again, higher is better. If I took those numbers, remember we had on average about $358 of winning, but we were right at nearly 73% of the time. Here's where the catch is that we may only lose 27% of the time, but boy, when we lose, it's a much higher number. So that's kind of hurting our averages for our expectancies. So when I combine those two numbers together, then I'm coming out with the 116. Okay, so it's basically the expected amount to make per trade if it performs, remains consistent with our prior results. Of course, there's all sorts of variables involved with that, but it's just nice to come up with a figure for that number. Okay. So if we have an accuracy rate of 73% winning, an average net win being 359, average net loss being 530, that's just suggesting that we have a 73% probability of winning $359. And when we're losing, thankfully we only lose 27% of the time, but when we lose, then we can expect to lose 530. As we all agreed, that's the number we need to change. All right, so let's come back here and make those observations. When I come back to some of our trades, and this is the fun part, believe it or not. Now, it could be a little time consuming, and I won't go through each and every one of these, obviously, but you at home, when you bring this up for your trades, it's kind of fun to kind of see those that stand out and look at the graph and say, well, what did I do right? What did I do wrong? Was it just, did I do anything wrong? Maybe I'm still okay. For example, I could just take something like this Urban here. Okay, at the very beginning of the year, we got in on apparently to bounce in a volume. And then we exit out all the way here in April. And we said, well, it's maybe sideways at resistance. Let's see what actually happened here. So we can conclude from this. So I'm on a 9-month graph. Here's our year to date here. Let's bring up Urban. And I've got some moving averages on this. Okay, so you'll see that we entered in. Clearly that was moving up. That was a pretty good date. A lot of volume. Broke out above our moving averages, popped up, and then it kind of stalled out right at this resistance. So if I draw maybe a price level line here, yeah, notice what happened. Kind of hit our head, came down, hit it again. So ultimately, I think we said to get out here because it was just going sideways, right? Maybe I got bored with it. I said sideways trend, it was at resistance. So only it locked in a $4 whopping gain. Yay, nothing to brag about there, right? But what could I learn from this trade? What ultimately happened with this stock? It wasn't long after we got out, and I don't fault us for exiting out because, yeah, it was going nowhere. Whole market was rallying up, and this guy was just being boring, right? Just not going anywhere at all, just sideways, nothing to speak of, until finally they had an earnings, and then, my goodness, like Jim points out, we gapped up after earnings. Well, why am I not seeing another bubble right here like we did here, And so it's kind of funny. We had a reason for entering in to begin with. Maybe it met our fundamental criteria. There was things we liked about the company. Like Linda says, a lot of shoulda, woulda, coulda. But what it tells me is that maybe I shouldn't have just deleted that altogether. at least I should have put that in a watch list, because if it warranted for us to be doing the trade initially, then it probably still met a lot of our criteria. It was just, it wasn't going anywhere. It was just sideways. But had I had that in my watch list still, now this is a very valid entry signal, right? Big breakout, huge, higher than average volume. Clearly that was a big resistance. Hence, that's why we exited out, because it just kept hitting resistance. So we wanted a valid trade of getting a break out of that resistance. When it did, it's kind of like, for crying out loud. I thought I was being patient long enough for 3 months, and then we get out. Had to wait another 2 months, I guess, and then finally we would have made money on that guy. Not huge, but still. So maybe I could learn something from that. Okay. Although it's coming down now. Right, what about our maybe a losing trade here? Let's take this YY here. I said we had a bounce and hold. This is back on the 13th. And by the way, I guess I failed to point out, for those who are new, if you're wanting to put, where you can see on your charts the trades, because I think that's pretty handy, where I see these little bubbles here to see our orders. They never go away. Just a reminder, you can go above to your settings, and just by default, underneath the general tab, it's here where you can actually show your existing orders, but you can also show your trades. And so even though I'm out of these trades, it still shows this as a history, which makes it kind of nice to be able to observe what we did on these particular trades. All right, so what do we have here? Again, I can't remember anything from even a day ago, let alone almost 6 months ago or so, or 9 months ago. But was there a valid reason for entering here? Was that an okay entry on this particular candle right here for the stock? Yeah, I have to admit, I could see why we did the trading without looking at my notes. Because we had a stock that did break out. It actually had some volume too, so that's cool. Then it pulled back, and then look how it was using maybe this old resistance as a new floor, and we had certainly a very bullish candle, popped right up. Okay, so I don't think our entry was bad at all. I think we had every reason to look at that. We even had some volume on that day too, just kind of doing things by the book. Maybe I jinxed it, because then after we get in, then what happened? It just didn't go anywhere, right? And then what happened? It broke down. So maybe what did I do wrong on this trade now that we can just see looking at this chart? Yeah, I mean, we got in at 38, didn't get out until 27.57. Would I have had another exit point that perhaps I should have really looked at? Now, I don't know. I don't remember if this was an alert or anything like that at all, but maybe I just forgot about it. But I like how Jim says we broke through a 50-day moving average. Clearly we had this line. If that was old resistance that became support, as soon as it started breaking down below there, I don't know why I wouldn't have been nervous. And certainly I think on this candle would have been my exit. In hindsight, it's always that woulda, coulda, shoulda, but if I'd been paying better attention, after it already broken through this line, okay, maybe I missed out on that initial drop there. But now if I'm trying to bounce up from there and hitting the 20-day and rolling over and already down below our 50-day, as soon as that broke through, that really should have been it. So I might have saved a few bucks if we could have gotten out at 34. Well, can you see how maybe I did everything exactly opposite on this trade? Because, wow, we get in up here at a high, and where did I sell at? It's like, are you kidding me? Now, maybe I was worried about earnings. I'm sure that's what happened. Maybe I finally stumbled across the stock, or it just said, hey, I've had it, enough is enough. I'm not going to take the gamble on earnings. And as soon as I get out, then which way it goes. It's like, I don't know if that happened. Is it only happened to me? Sometimes it just feels like me. It's like, because I've done that exactly wrong. I get at the high, I sell at the low, then it starts to bounce up. Now, admittedly, it didn't really go anywhere, and I probably would have been kicked out on this date here. Talk about volatility. But now, since then, it started to move up. So we'll still be losing on the trade, quite frankly. But I think here, if I want to try to improve upon my exits, one, be better, paying better attention. Or I think another thing I could have done, although I didn't really invest that much, it was only $3,800, not $5,000 or anything. But perhaps when we had this bounce here, I don't know. I don't think that would help me out. But I was going to say maybe I could have just scaled in a little bit, because after all, we were buying near a high right on that candle here. I think 38's right here. We weren't near a low. We weren't like bouncing up from here or anything, but I guess I could argue that, although we did have volume, so I really don't know what we could have done differently on that, other than perhaps I could have scaled back a bit, noting that we're not really at a low of a trend. We're buying on a breakout and a bounce on that. I could have been impatient that if it's just going sideways after it broke through this line, maybe take at least part of my position off the table. And then certainly here, that would have been the better time to get out. I don't even know if I'd be looking at this stock even today, even though it's moved up a bit. But nevertheless, it did lose. Although when I look at what we lost, percentage-wise, that's pretty bad. But let's say for a $100,000 portfolio, I'm still only losing around just over 1%. So even the dollar amount's not that bad, quite frankly. But I could have cut that much, down much lower. Like I say, thank goodness I'm winning more than I am losing. I don't know, just kind of interesting. Right, so that's the bad, that's the ugly. Let's take another winning trade here. Let's take like CHDN. I'm just going to take a few of these to see what we can observe from this. All right, so how do we do on this trade? Kind of interesting. I'm not exactly sure why we got in on that particular date, other than was it just the trend? And again, I put notes on my trades. So where is it here? Well, we had breakout with the volume. I wonder if that's what I put on my note here. Let me come to let's just bring up CHDN. Oh, it was actually an alert. Okay, so it was a Charles alert. It was good fundamentals. It was getting a breakout trending higher. I intended that for a buy and hold investment. And then I wrote down some reasons why not. Well, markets were struggling at that time, and the stock was trading at a prior high resistance. Okay, that's good to know. So my fear at that particular date was that, well, the stock is already at a high. It's already at a resistance. What am I doing considering that? Well, again, technicals plays a little bit more of a backseat role when we're looking at this for more of a buy and hold, right? For more of an investment. But I think that's kind of interesting. Whoops, let's come back to our chart. That, yeah, I could see how that would be a legitimate fear. Look how much we'd already risen up. My goodness, from 100 up to 120. Oh, it's supposed to split. They did that as a stock split. That's why it's showing 245 there. So we just cut that in half. So about 123. It's already moved up 23%. What am I doing buying up, after it's moved up that much? Well, again, fundamentals being part of the trend. Admittedly, it didn't really go anywhere after we got in until eventually they had a stellar earnings. And then when it spiked up like that, I think I put a note there that we exited out because, big move after earnings. In fact, I'm just curious how big a move that was here. If I take this date we closed here, of course, it opened up at 5% immediately and then shot up to around 15%. So yeah, 15% move in one day, that's a pretty big move. So maybe I decided after being bored with it here, we locked in our profit. Turned out it did pop up a few more days after that, but then it just completely reversed. Again, I would not have known that was going to happen. But I'd actually pat myself on the back and say, you know what? Now in hindsight, I'm glad after such a big parabolic move that even if I hadn't sold everything, I would have at least sold something, part of my position. So I'm happy that we decided not be too greedy and just cash in when we could have. Now we could have exited out back here and probably got about the same amount, but it started breaking down below that way. Maybe a trail stop would have worked on this too. Okay. All right, let me just quickly address some of these questions here. Yeah, John points out actually too, that's a good thing to point out, that money would have been invested in another stock that was moving up, not sideways. That's exactly right. He's onto my thinking there, that there's an opportunity cost, that I'd be thinking, well, yeah, why do I want to sit there and look at this loser or just the sideways trending stock if the overall market's moving up? I could be putting that money into something else. Was there some change in the fundamentals in early 2023 when the rest of the market was headed up? There could be. And again, I should probably put in more notes to evaluate that on the stock itself. But at the time, yeah. And that's the problem. Sometimes it's tough to remember, well, what was happening? Was there news from the feds? Was there some other sector that was really struggling? Was there an external event? As far as raising your stop, you can easily just go in and like on that WMB, I could just cancel replace this order. I could just simply drag this and move it up, and that way it'll just go ahead and move up that stop order for us. So it's kind of fun just when you have the order showing up on your chart that you can just use the order itself on the graph to raise it up. Fundamentals could change after the earnings, definitely. And so certainly on those buy and hold and those investments, the way I look at it is a lot of that information should be priced in. Right, let's face it, when the news comes out, it's already old news to you and I. Whatever reason, they thought this was good news initially, and it was. Look how they had $1.96 of earnings versus $1.73. So now, from a value proposition, okay, it rewarded that for the decent earnings. Didn't last very long. Then eventually people, I guess, were taking their profits, and maybe rightly so. I mean, if the stock had moved up from 100 up to 150, 50% return in just 3 or 4 months, maybe that's all it is. People locking their profits, not wanting to take that risk of things falling down. But who knows? All sorts of different reasons, and that's the problem. Seems lower price stocks are hard to determine or set stops. They seem too tight. Okay, I think that's a great observation. Let's make that observation here, because when I start looking at maybe another one here, let's take this. What is this here? PERI. Looks like we got in our breakout with volume. Don't remember this trade at all. Oh, okay. Look what happened here. Okay, so again, not seeing the future. I can see why we looked at that for a trade. Pretty decent looking upward trend. Had a nice little bounce up off a diagonal trend line. Even had volume to go with it. Looks pretty good. You can blame me. I guess I'm a trend killer because I get in and what happens? I mean, honestly, this stock was going up all year. For 4 months, I get in on a legitimate bounce and, oh, let's go the other direction all of a sudden. Are you kidding me? Yeah, it must be me. I don't know. But that's pretty aggravating, I have to admit. And then finally, it looks like I get out down here, and I can see why, because it broken through this line, broken through our moving averages on this day before. It looks like it was breaking through that area there. And as soon as I get out, then what happens? It starts to ricochet back up again. That's just funny. It's aggravating to look at your trade sometimes to see how that's playing out. So again, I'm not so sure what I could have done differently here, other than if this was intended to be a trend trade. Well, I said it was a breakout trade. I didn't really say it was a trend, I guess. But I mean, I'm just curious if I have any notes on that too. Let's just see if we can find better notes here. Oops. Oh, gotta type better. Come on. PERI. Let's see here. Yeah, so chances I use that for a strong upward trend at highs. We'll exit it. Look what it's here. I even put a note in. We'll exit if it breaks below diagonal support. So now clearly I can see what we did wrong on that trade. I broke my own dang rules, didn't I? I even wrote it down, dummy. I write it down and then I don't follow it, because clearly we broke through it. I guess I was probably just in disbelief, in denial. Do you ever get in that denial mode? Again, that's just pure emotions, right? Where it's like, this is why I write those things down, so I can't. Or maybe it was on vacation. It might have been during that time period. But clearly we broke through our diagonal line, and then when it struggled to break back out and broke to this line, that really should have been it, right? So maybe I could put a note on the graph. I could have put a stop, but I think I've got an example or two here where maybe, again, having a stop might have been detrimental. In fact, we know what we did wrong on that trade, so I could certainly improve on that one better. Whoops. But let's see, there's one here I wanted to show you. I think it was on FedEx. Let me bring up FedEx. We made just a tiny fraction on FedEx here. All right, so look what happened on FedEx. Again, not a bad entry. I mean, I didn't really get a lot of volume or anything, but it popped up above, pulled back and bounced like the stocks do. Sort of part of that hold pattern, that bounce up. Then it went up and really went nowhere. And okay, I just locked in a fraction of the profit. Maybe I was bored with it going sideways, didn't want it to fall back down. This is hitting some resistance. So I guess this isn't the example I wanted, but I know that I've got an example or two where maybe my stop for my exit was too tight. Maybe I should have been a little bit more patient with this, because even though it wasn't really going anywhere, it was still overall in a longer term upward trend, right? That now I've missed out on this. Or again, the other thing I could learn is that, well, okay, maybe my exit was all right, but I should have been still keeping an eye on it to where when it finally got a breakout, and I'm sure on this date here, I might have looked to get in. Don't know if we had volume, then suddenly it came down. Well, because of earnings, knowing me, I probably would have waited, right? I think the earnings was maybe a few days later. But clearly on a date like this, with the volume and the breakout, yeah, so I just need to be paying attention to those trades on that. All right, let me just take one or two more. I didn't want to go through all these, but I just wanted to kind of give you an idea of how you can analyze what's happening. I could take some of these opening trades here to see what's happening, because obviously these aren't being computed, but I've got an open trade on Monster and MLM. Let's just see what's happening there. Okay, yeah, so clearly we've got a pretty good winner here. This might help our averages if I close it out. And I honestly was tempted to go in and say, well, what if I had just closed out all these trades, all the trades that I put in this year, just put in today's date that I'm analyzing this. Maybe put a star in the notes to let me know that I wasn't really closed after all. Then that would give me an idea of what my performance is year to date, not just on realized gains. But it's encouraging to know that I can see why we'd still be holding on to a Monster. Beautiful breakout move. So that was a good entry. Lately, we're just going sideways. Remember FedEx and some of those others, though, we'd break out and then go sideways. I'd get out, and then before you know it, the thing would just take right off. I think right now, though, we could draw a line in the sand because we've already tested this not just once, but maybe twice now, that, if we're going to be at least sideways to upward trending, it should want to remain above that line. If unfortunately it comes down and breaks through it, well, then things could be changing from a trend perspective. And I would have forfeited a lot of my gain on that. It's not much to begin with, but what was the other one? MLM. Oh my goodness, why would we get in there? We only bought 10 shares, but MLM, let's see if I put a note on that. Well, breakout with volume. Oh, okay, we did have that with the earnings. Just trying to think, why would I, maybe I was trying to break out above this, but we didn't get volume on that particular date. So I might have cheated on that one, or maybe I was just looking at this prior breakout. Fortunately, though, the stock has been going in the right direction, although most recently, like some of these others we looked at, it too is just kind of ho-humming around. So I could, again, have an exit strategy below here, maybe put in a trail stop, or give it a chance to see if we might move up. If not, if we break down below, I think I'd be more inclined to just take my profits. But the key then is I should put that back in my watch list and keep an eye on it that, if it struggles for the short term, then wait for a next new opportunity when it starts to break out higher again. Okay. All right. So I think this is interesting. So where are my big losers here? So we had this big loser here on YY. We saw we did wrong on that one. Well, PERI was another one. These other losers don't look all that big to me. So maybe it is just these two outliers. Yeah, then how many others there? So I guess it was just these really two outliers that kind of skewed, my averages for my losses. But I think another thing we could note, because those are pretty big, right? 27%. When I start looking at the profit column, with the exception with our one huge winner right here, and I guess that was on SMCI. We might look to get in that one again. But how do we feel about my winning trades? Just kind of scanning that profit loss column on the winning trades. 4%, just a fraction here, 10% is not bad, I guess, but a fraction again. APA was a swing trade. We had 18%, but they're not really that high, are they? I always was taught that you should, cut your losers and let your winners run, right? Now maybe some of these started going in the wrong direction. I got out, but there's FDX again. There's WMB. What I have there? There's another swing trade, KBR. Yeah, it just doesn't excite me much on those. EXAS, I got out before earnings, and that turned out to be a wise move because on that one, remember this stock, it came down after earnings. So I just I think those, because I was seeing a whole bunch of other stocks just turn negative after earnings because the market's being negative. So that could be, I don't know if I would draw a conclusion I should get out before every earnings, but certainly when that fear was out there, that turned out to be correct, at least on that trade. Now here's one. This is a short trade. This is where we shorted this. This is PENN, where we sold short at $26 apparently. See if we can learn from that. Actually, that didn't turn out to be a bad trade at all. Look at that. Can we see the reason why we decided to take a bearish trade? Right, clearly this stock was downward trending. We'd hit this as support, broke through it, used that as resistance. We rallied up, and then sure enough, we used that support as resistance. So we sold short 100 shares at 26. I'm sure we had like a stop order up here somewhere. And then when we came down to our target, we bought back at basically 23. So we made 300 bucks. Now that's a beautiful textbook trade. That turned out beautifully. And I'm glad we didn't get too greedy and expect it to drop even further. We just put our target to buy it back when we hit our target. It did exactly that. And then sure enough, it started to rally up. So, okay, I wasn't jinxed on that trade. I am kind of sad I just didn't do the same trade all over again though, right? I could have gone short there. And of course I would have been getting out before earnings, but very interesting. And Penn, I think that's a great question. What percentage of these trades were Charles recommended? I wouldn't have a percentage on that. As we saw, some of these were alerts. Of course, a lot of these are just my own trades or other trades that students chat in when we have our, our live Q&A classes. Okay. Can you put in alerts if the stocks go up? Yes. And I think that's a great idea. See, that's thinking now. It's like, okay, well, what can I do to remedy this situation on seeing those stocks that eventually do break out higher? I could just quickly put in an alert and say, okay, if it wants to break out, then notify me, text or email me, so then I can go back to my computer and say, oh, that's right, I forgot about this stock, but now it is breaking out higher. I might do something like that on MS or SMCI. Here, I think I had a trail stop. I got out to keep our profits because things were changing here. Look how we dipped down after earnings. My goodness, look at that weird reaction today. That's really a shame. I was hoping that this news from NVIDIA would make the markets try to go the other direction, but maybe there's other news from the Fed's meeting in Jackson Hole. Maybe they said something. But look how that spiked up first thing this morning, and now here we are all the way down here. And that's a shame because it looks like it was trying to bounce up. But to your point, what I could do now is that, well, all right, that's not a good day today. But if we do say go above 300, it's kind of funny how maybe our high is right near 300. I could have an alert that says, hey, if we're finally breaking out above this area, then chances are the stock is resuming along its overall upward trend. So I could just right click in my chart, create an alert, and tell the computer that the stock is trading at or above 300, just for an example here. Look to enter. And in your live account, you can set it up and have it linked to your smartphone, so you'll receive a text alert. In the virtual account, I think it just dings, or you might put in your email address and it'll alert you that way. But I like that idea. I'm going to put that in. All right. Well, let's wrap this up. I know, let's see, we had a question on ELF. Yeah, that would have been a valid entry yesterday. Not doing so hot today. I believe we still have a position on that. I don't know if it's in this account or the other account. Well, looks like I did just barely get in. That's right. We put a new trade in on that. Okay, it's down a little bit right now after we got in, but I'm okay with that entry. So my exit, though, I think would be that if we're going to break through our moving average, fall down below this 115 area, that should be it. We'd get out at that point because the trend could be changing if the market, is changing that way. That still looks good, though. Glad you brought that up. Rick, that's not a bad entry there. Yeah, Greg says, too bad we can't review the results against sector rotations. If I really wanted to put the time into it, I probably could do that. In fact, that's interesting comment. I might suggest that we maybe could add like a column for our maybe the sector ETFs. So maybe we could make some observations on what sectors were doing better. I thought it was interesting, the correlation I found looking at this is I noticed a lot of my trades, for whatever reason, and maybe it was just because of the markets and the way they were moving, and I've not really counted, but it seems to me that I have a lot more of these breakout trades. right? Breakout, breakout. And I can't say that they were doing better or worse, because I had a few winners, I had a few losers. And again, maybe it's just the nature of the markets, but I didn't really see a lot of, say, support bounce trades. Okay, so perhaps I need to be, if I want to improve my winning trades percentage-wise, right? And I'm wondering, and now I'm just thinking out loud here, is I'm wondering maybe why the percentage for my winning trades were lower is because, let's face it, I'm buying on the breakout, right? So I'm not buying on a low, right? So if you get a breakout, you get in, then it maybe goes up a little bit, then you get out. Whereas if I could buy more stocks on a support bounce, you buy low, sell high. Does that reasoning make sense? It's kind of like, well, perhaps that's why my winning trades aren't really that, in my opinion, not that stellar. It's because I'm getting in at the highs than getting in more at the lows. And again, that may not be my fault. It just may be what was happening with the stocks and the markets. But perhaps I need to be more patient. You look for those more examples of stocks that are getting the support bounce rather than the breakout. Although I lost on these guys here clearly. Okay. Well, that's the key, right? And I'm not going to go through all this, but and I appreciate your patience and just letting me think and kind of think out loud as I'm going through this. But that's how you learn. That's how you draw some conclusions, at least, or observations to now what can I do to improve my trading? And so that's what I would resolve to do is that one, keep them in a watch list, certainly be paying better attention to get on my losers more quickly, to cut my losses so I can bring that average loss down, right? I think I really need to lower that one quite a bit. And at the same time, be focusing on, maybe buying on the bounce so I can get larger winning trades. Because if this number starts to change, and I think with a larger sampling size, in fact, I know it would change. It would go down dramatically. The more trades I do, I'd like to think that I'm right 3 out of 4 times, but I can tell you right now I'm not. But it's okay. I've proven that I can be right 60% of the time and make a fortune. So I guess the thing to learn from this is that being right is not the most important thing, right? You can actually even be wrong more than you are right and still be very profitable in your account as long as you have, those big winners and much smaller losers. That's the key ingredient. All right. So sum it up then. Here are our numbers here. So the numbers tells one story. When we take a deeper dive and look into it, though, that we were able to determine what else could help out. I'm at least pleased that we do have a 1.8 profit factor, but I want to bring that up. But definitely, this is the culprit right here. I need to fix that and then raise that up so I can get a larger expectancy per trade. But at least we are in the positive. So that'll be our goal, for the next few months here, the remaining of the year, at least, to try to bring that up. So I think what I'll do is maybe teach some class like this towards the end of the year again to see have we improved. And we took a full year of trades, was I able to bring that number up? And if you have, that's the kind of fun thing about doing this, is doing this on a yearly basis. Every December I'll do that. I'll go back and run through the numbers and see, well, did I improve over the prior year? And if we didn't, okay, I got to work on things, or maybe it was just the markets, but if it is improving, then you suddenly get your confidence. It's like, oh, hey, I may not see it day to day, but now that I've looked at the numbers, if I am improving, then it's like, hey, I'm doing something right and that I should be profitable. All right. So keep in mind the different strategy methods that you're using: buy and hold, trend trading. Day trading is very difficult, but swing trading certainly. In fact, I had some pretty good swing trades, it looked like. And maybe that was more appropriate for this kind of market where, at the end of last year, everything was just up and down, all that like that, right? In fact, a lot of the markets are doing exactly this year too. So perhaps, my buy and hold wasn't all that successful compared to maybe more of a shorter term trend trade or swing trade. All right, Panna, yeah, we don't have anything for options trading just yet. That might be something we'll work on, though. I think I do know of other students out there that do have trading journals for options, though. So you might inquire around about that. As a part of my monthly routine, I have to admit, no, I'm kind of lazy that way. It might be helpful to do it monthly, but I may not have that many trades just 1 month later. So certainly, I think maybe biannually. I kind of like doing it now. It's kind of funny. I always thought of the beginning of the school year as like a brand new year, right? My January 1st isn't really January. That's not really my new year. It's my new year's always been the beginning of the new academic year when you go back to school, right? You start over again, that type of thing. And that's what we're doing right now. All right, so your next steps will be this. conduct a portfolio review. Be dead honest with yourselves. Consider using a trading journal to help document these things. It was kind of enlightening for me to do this last few days, just to bring up those. It was time consuming. It's easier when you do it while you're going along, but I was glad I did that because I got kind of lazy over the summer here. But you can learn a lot from that. Learn from your mistakes. See what we did wrong. Think out loud. Get a third party person to look over your numbers too, and they can tell you what stands out in their minds. You guys did the same thing. But make sure you focus on your accomplishments too, right? To me, it's oftentimes always focusing on the negative. Don't do that, right? Focus on what you did right. And thankfully, we did have a few trades there that did very well. We did it perfectly. It's like, okay, I need to do that over again. I need to focus on that and repeat that, right? Throughout all the bad trades and just repeat that same process that I did for those winning trades. Okay, and then make sure you set new goals and vow to do even better. In other words, always be improving, But then finally at the end, make sure you have fun. To me, trading is fun. So don't knock yourself down too much. Even if you're losing, when you first start out, when I first started out trading, I had, I got lucky. I had a bunch of winning trades because it was back in the late 1990s, but I got beat up too. And in a way, that was a good thing because it was an eye opener to me. It taught me that I can't just buy any tech stock and expect to make $1 million off of it. That I had to be, markets are not easy to trade. So it really taught me to really focus in on things. And so be improving, but make sure you have fun and that's how you have fun, is by improving. All right, well, I hope this has been helpful for you. I appreciate your patience going through that. I know that's a little bit tedious, walking through all those numbers and trades and all that, but hopefully you got a sense of what you want to do, and I encourage you to do the same thing. Use that journal if you'd like. Remember, you can find this underneath the resources tab, underneath the stock investing worksheets, or again, go out there and see what others are out there. I know other students. You might chat in one of our Q&A sessions. There may be students that have even much better worksheets, and I'm all for it. Use what works well for you. When I first started, I just wrote down on a yellow legal pad. I just write those things down. I think Charles does something similar to that too, quite frankly. But now with Thinkorswim, I like the idea of putting in my notes. So like if we did a trade on ELF, as you're putting in the order, when you confirm and send, it'll be right here that you can type in your notes. Okay, so just write in your notes and ask, I don't care so much about the numbers as I do about, well, why I would do the trade and why not do the trade. You have to type better than I can. Okay, and then those notes will stay there. And even on your monitor tab, you can come in at your positions and you can add a notes column, right? Just go over to your settings, look for notes. Oh my goodness, I can't type to save my life. There we go. So you put in notes, put that whichever column you want it there. And then that way I can go back and say, well, yeah, why'd I get into AMAT? I guess it was alert too, that type of thing. Aflac, I think that was not alert, but it had good fundamentals. So you can learn a lot from that, and those numbers will stay there. And even when you close out the trades we saw in your history, you can go back and bring those up. And heck, for that matter, you can also go back up to your, where is it here? Your think log. And I could type in my symbol. So if I brought up, CHDN. Well, okay, I didn't have any notes on that. Or the CHND. Let's bring up PERI. There we go. So I can just quickly bring up my notes for a particular symbol as well if I have more than one notes there. So that's kind of handy. I like that idea too. All right. Well, thanks everybody. Appreciate you tuning in. We'll be back on here later this afternoon. Greg will be teaching the Q&A sessions. You can ask follow-up questions there. I'd be glad to help you out. As always, if you're using Thinkorswim, make sure you contact them. They're the broker, we are not, so they'd be glad to help you out. So I want to thank you for tuning in. If you have ideas for me, by the way, that's why I taught this session, because people chatted in and said, hey, I wanted to learn more about the trading journal. So I hope I did that justice, but by all means, I'm open to your ideas. Feel free to email me, just say, hey, Rob, I wondered about learning about this particular topic, whatever, within reason, right? And I'll see what I can do to accommodate. All right, thanks everybody. Have a fantastic rest of your week and weekend. I'll see you back here next week. Take care, everybody.